What's up guys, Steven DUX here. Welcome to our new YouTube videos of the week. So today we're going to talk about some recap that the trades I did this week. There's no big trades recently. This week has been really slow, and I'm going to talk about how to really filter out trades that you don't really need and you only want to focus on the right setups, because some of the trades that barely miss the criteria and some of the trades that doesn't meet the percentage of the criteria, so those trades you shouldn't be taking. And if you take those trades, you're really taking a lot of risk into those trades. So let me give some examples. So BOXL was one of the trades that was a little bit risky because the stock didn't really gap up that much. It had no volume in the pre-market and just started parabolic into the 4.1. So the stock didn't really have any percentage until it parabolic to 4.1. And there's decent somewhat resistance in the $4-ish, and I shorted in the, I think it was in the 370. I covered in when it broke 4, so that was a really bad trade, and I did took a decent loss on this one, but it wasn't that big of a deal. And I didn't retrade it again because the volume's getting too crowded. So if the volume started getting more overwhelming than the previous volume, that day traded about 25 million, this day traded about 15 million. So it's about 10 million volume or more traded on November 5th. So if the volume start to get really overwhelming, I stay out of those trades and I wait until they show the first red day. In this case, BOXL wasn't really up that much. That's why I didn't short in after the first red day, but I just skipped it, BOXL, and went for something else. Sometimes you can't really find the resistances. If it reaches your maximum level of risk, cut your losses. It's worth it. Don't wait and hope, because some of the parabolic can go straight and bust through the resistance and there's nothing you can do, and you're sitting there waiting for a side to come down, but it's way above your risk and you're risking a lot more risk than you expected. Some of it sizing too much and they add on the way up, and that's how they blow up. So I tend to stay away from those mistakes. If it reaches my max level that I plan on this trade, then I straight cut it, no hesitations, and stay disciplined in the market will always lead to the right decisions and help you stay more rational. The next trade I'm going to talk about is AVCO. The stock went from 5 to 13, and it didn't really show any kind of resistance, and it just straight downtrend from 13 to 4, and you can't really find any consolidation resistance in this day. And shorting the 6 is not very ideal because the risk range is way too far. Probably the only consolidation resistance is probably at 10-ish, but that wasn't enough resistance to short into. So all those trades, when they're parabolic, and it's not a bounce short because it doesn't have enough volume that consolidate in a certain resistance zone. Let me show you an example. RTMB was really similar chart, but it behaved a lot different because right around here, you see stock trading about 5 million, then suddenly volume overwhelming, then broke through the resistance and came back down, and it broke the resistance again. So all those trades that didn't really have a certain consolidation level, it can be really choppy and you can't really find where they're gonna top out. If you can't find where they're gonna top out, then you're risking a large of range that can be possibly reached, and you can't really identify where your risk is. So RTMB was one of the examples that AVCO could definitely pull out. If it got enough volume, can go straight to 12, then you have no idea where the stock's going to top out. The next thing is I'm going to talk about is FNMA. Now, trading around $1 billion market cap in OTC market doesn't really happen that often. That's why I don't trade that much. I don't have enough data on it, but seems like the stock got the top range of volume is about 80 million. So the stock's going to be top out really soon if it reaches those maximum volume in the history. I will be paying more attention to it, but there's decent resistance in the 4 to 5 back in 2017 in January. So the resistance is a little bit too far. It's almost a year, so be extra careful. Right now it's still parabolicing. It's still a little bit far, 30% to 40% from the $4 or $5 ish. So a little bit more patient. We still got about a 3, 4, 5 days left. I would say it should definitely make a move in the next week. So this will be on top of watch into next week. And the stock is not trading like NASDAQ stocks. It doesn't really react that fast. Right around here, you did first red day, second red day, and bounce right back, and you did a final panic. So typically NASDAQ can straight panic after the second red day and right around and drop about 70% into the $2 zone. So when you want to trade FNMA, set a tighter risk. For me, I'm only aiming for large volume that have really consolidated and started to top out. That's what I'm aiming for. Other than that, I will stay away from FNMA. Didn't trade that much this week. Hopefully there's more opportunities into next week. And that'll be all. Thank you very much, and hope this video lessons helps, and I will see you guys next week.